Good morning. In today's class, let us try to complete the provisions relating to job work and also provisions relating to assessment and audit. All these three chapters are theory chapters, but unlike your refund theory which we saw yesterday, it will not be as dry as that of refund. In fact, the concept of job work is actually really interesting. And the topic of assessment as well is not like your income tax, where there is huge volume of information. It is very, very simple and content wise very, very limited, unlike your income tax. And lastly, audit is a very, very small topic. Okay. So though these are theory chapters, I wouldn't say that these are in the sense that like how you read a general theory, it is not only theory, but it involves certain concepts. So therefore, you can be assured that it won't be boring. Let us start with the provisions of job work. Now, the provisions of job work, I would actually want, though I have shared a material with you, that material is nothing but the institute's material itself. The reason why I have shared the material, institute material, is institute material in respect of certain chapters are prepared really well. As far as job work is concerned, certainly job work provisions are exhaustively covered. What I want to do is I will be teaching not through the material, but I will take a note and explain the entire process of job work. What we can probably do is once we are done with the note, we can just run through the entire chapter in the study material. From the exam's perspective, what is the weightage for job work? Weightage ranges around 4 to 8 marks. And in recent times, I have seen they have started asking problems, not only theory questions. In fact, last time they asked a 6-mark problem. And in new syllabus or old syllabus, there was one compulsory question as well. So therefore, it assumes a great significance from the exam's perspective as well. Let us directly start with the provisions of job work. Now, let us understand not with the study material, let us try to understand with some practical example. Right? So let us take some of our friends as example, whomsoever has joined today. Let's say Varsha. Let me take Varsha as an example and Mahendra Kumar as example to understand the tools of job work. First, before going into the procedures of job work and other provisions related to job work, first of all, what is job work? What is a job work? Let us take a simple example to understand. Okay. Let's say Varsha is engaged in supply of mobile phone. Supply of mobile phones. Right? So she is in the business of buying and selling of mobile phone. Right? Now, what she does is she does every significant aspect of mobile phone, such as display, your battery, all other things she does. Right? She manufactures everything. What she does is she transfers the mobile phone to Srini, myself. She transfers the mobile phone to Srini. For what purpose? For assembling purposes. So what she does is she does everything, including the processor, other components in the mobile phone. After everything, after all processes, My job is to assemble each and every part. Let's say Srini does the following things. Okay, all these screws at the edges. Okay, and back cover, right, and coating, painting, etc. So she does everything. I do the following activity on the mobile phone. So in the edges, I have to put screws, and I have to put a back cover for that, and I have to also put some coating. This is what is my role, Srinivasan's role. So if you try to define this term, there are three activities. One, Srini does some process on goods belonging to Varsha. So some process or treatment. So definition is job worker will do some process or treatment. What process or treatment job worker does? Srini does coating, putting screws, and also back cover. So therefore, this is a process or treatment. Second element is on goods belonging to a registered person. Assume that Varsha is a registered person. Varsha is a registered person. The goods should not belong to Srini. The owner of the goods should be Varsha. So owner. So this mobile phone owner, is it Varsha or Srini? Certainly Varsha. So therefore, I do some process or treatment on goods belonging to some registered person. So this is called the process or treatment, right? And the goods belong to Varsha. This is actually called as job work. So job work to be defined, job work is equal to treatment or process, because you need to necessarily write this definition in the examination whenever a question from job work is asked. That's why I'm discussing the definition. Treatment or process on goods belonging to a registered person. This is the definition of job work, right? Now, the one question that may arise is, in a job work transaction, can the job worker, that is in this case Srini, can he add inputs? In the sense, the screws that I add are goods. Sorry. The screws that I add are goods, but the screws does not belong to Varsha. Screws belong to myself, Srini. The question is, in a job work transaction, can there be a case where job worker also adds his own goods? Is the question. Answer is yes, he can add. So in addition to whatever the principal, so Varsha is called as principal, Srini is called as a job worker. There is some issue with the software of this pen. Please bear with me. So Srini is called as job worker, Varsha is called as a principal, right? So the first conclusion that we try to arrive at after reading the definition is that there is no prohibition for the job worker to use his own inputs for doing this treatment or process. This is point number one. Point number two, please understand, job worker definition specifically says goods belonging to a registered person. Suppose if Varsha is an unregistered person, this transaction will not even qualify as a job work, is the understanding. So based on job work definition, we understood two things. One, job work can happen only if the principal is a registered person. Point number two, in case of job work, in addition to whatever treatment or process that she needs, she can also include some inputs or goods belonging to job worker himself. But that should be very insignificant. You cannot, in a case where you assemble a mobile phone itself should not belong to Srini, or the main components of your processor, battery, etc. should not belong to Srini. So, if at all, let's say, Varsha doesn't do anything, I have to purchase the battery, I have to purchase the processor, I have to purchase the camera cells, etc. So, everything if I'm going to do, then that will not be qualifying as a job work. What will qualify as a job work? You will send some goods to me, I will do some treatment or process. For doing this treatment or process, I should add some goods. Okay, that will qualify as job work. So this is a circular which is given to clarify that job worker can certainly use inputs belonging to Srini. So therefore, we have understood what is a job work. Now let us try to understand this job of transaction and its taxability. Right? Very interesting. If you would. Right? Now continuing the same example. So let us try to understand each and every leg of transaction. The first leg of transaction. So now Harsha, supplier of Harsha, Srini. Let us go one by one leg of transaction. Firstly, if Varsha wants to send goods to Srini, she needs to purchase it from someone. Yes or no? So therefore, Varsha will purchase from supplier of Varsha. Let us take one name, whomsoever is there. Let's take Mahendra Kumar as an example. So Mahendra is the supplier of Varsha. Now, normally what will happen? Mahendra will send goods to Varsha. Varsha in turn will send to Srini. This is what will happen. But instead of that, supplier of Varsha can also directly send the goods to Srini. So the first leg of transaction is sending of goods by the principal to job worker. Principal can either send the goods directly from the premise of supplier of Varsha to Srini, or he can also receive the goods. Principal can also receive the goods from the supplier, and thereafter he can send it to Srini. Therefore, both the permutations are possible. So in this case, let us assume Varsha is sending to Srini. What is the taxability? Right? Suppose he himself is directly sending to Srini. What is the taxability under GST law? This will be the first part of discussion. Right? Now, before going into the taxability of this transfer transaction, if you would recollect, when we discussed section 16 of CGST Act, that is input tax credit provisions, we saw one important point, that receipt of goods is compulsory for availing input tax credit. We had a lot of conditions for availing input tax credit. One of the conditions was receipt of goods. Now, in this case, if at all supplier of Varsha is directly sending goods from his premise to Srini's premise, though actually the purchase is made by Varsha, can she take credit of this particular inputs? Normally, the answer is no, because Varsha is not receiving the goods, right? Therefore, she cannot take credit. However, if you could recollect our discussion, we saw two exceptions to receipt of goods. One is the bill to ship to transaction. Second is one is a job of transaction. So therefore, to conclude, whether or not the goods are received from the principal or supplier's principal supplier, the availability of credit for Varsha is not at all disturbed. Varsha can avail credit despite the fact that the supplier of Varsha is directly sending the goods to Srini. This is point number one. So the first leg of transactions, Varsha has to receive some goods and then she has to transfer it to Srini. It can happen in both ways. A supplier can directly send it to Srini or supplier to Varsha, Varsha to Srini. In both the cases, input tax credit availment is not disturbed for Varsha. She can take input tax credit, no issues. Now, moving on to the next leg of transaction. So, as of now, role of Mahendra is over. So, let us delete Mahendra. Or let him be there. No problem. Now, the question is, when Varsha sends goods to Srini, is Varsha supplying goods to Srini or not? Is the question. The provisions of job work says, whenever you send the goods for job work, no tax needs to be paid. No tax needs to be paid. That is the biggest advantage for a principal job work transaction. So, when Varsha sends the goods to Srini, she need not pay any tax on this transaction. She can send the goods just like that. Of course, you have to send it through a delivery channel. If you could recollect our discussion on tax invoice debit and credit note, I told you under some circumstance you are supposed to raise a delivery channel. One of the circumstances for delivery channel is your job work. So when Varsha sends goods to Srini, she will send it under the cover of a delivery challenge. She will not raise a tax invoice because this transaction is not even a supply transaction. So therefore, this transaction will not qualify as supply since there is no tax paid. So whenever there is no supply, we know already that it will be delivery challan. So therefore, a delivery challan can be issued by Varsha when she sends the goods to Srini. Now, can Srini keep these goods and do this process forever? No. What he has to do is, now before that, Varsha is sending to Srini, right? Let us assume Srini does not have the capability of quoting on the mobile phone. So we saw three processes done by Srini. One is all the nuts will be doing. Second one is back cover. Third one is your coating. Let us assume Srini does not have the capability of coating. So therefore, Srini sends the goods to, let us say, Ganesh. So first Varsha is sending the goods to Srini. Varsha is called as principal. I am job worker. This is supplier of Varsha. He is also a job worker. Right? So Varsha sends goods to me to do the following activities: nuts, coating, and back cover. I know how to do this process and this process, but I do not have the competence to do coating. What I do is, after doing these two processes, I send the goods to job worker, another job worker, right? So now Srini is sending goods to one more person called as Ganesh, who is also a job worker. The question is, should Srini charge some tax or Varsha charge some tax on this transaction? No. Just like how you treated this leg of transaction, no tax has to be paid. This leg of transaction also has to be treated in the same manner. So when the goods move from one job worker to another job worker, there is no need for any payment of tax. That transaction will not qualify as supply. And like I said previously, a delivery challan has to be given for this transaction. Now the question is, can Srini keep the goods belonging to Varsha forever, or is there any time limit? There is a time limit. So time limit is divided into two. One is inputs. Second one is capital goods. Right? If it is inputs within 1 year, capital goods within 3 years. What is this 1 year, 3 years? We see. So let us assume Varsha sends the goods on 1st January 2020, right, to Srini. Let us assume Srini also receives it on same date. So in this case, Srini has to send back the goods, that is mobile phone, within 31st December 2020. All right. So in case of a principal job of transaction, when principal transfers the goods to a job worker after completing the process, he has to send the goods within 1 year from the date of receipt of goods. Now the question is, what if he does not send back the goods to Varsha within 1 year? Let us assume I am sending the goods on 1st February 2021. I have breached this 1 year criteria. What will happen is, there will be two consequences. One, initially when Varsha transferred goods to Srini, she did not pay any tax. Now the transaction between Varsha and Srini will be a supply transaction, will be deemed to be a supply. So though Varsha did not pay any tax initially, since the goods were not taken back or sent by Srini within 1 year, this transaction which happened initially between Varsha and Srini, now it will be deemed to be a supply transaction. Previously, it was not a supply transaction. I was only giving delivery around. I was not paying any tax. Now, since it is not delivered within 1 year by the job worker, this transaction is treated as supply. Consequence number two, this transaction is treated as supply not from 1 to 2021. This transaction is treated as supply with effect from 1st January 2020, which means Varsha has to pay tax plus interest, and interest has to be calculated for the period 1/1/2020 to 1/2/2021. So, with this start, following point emerges. Point number 1. There are 3 parties involved in our scenario. One is supplier of Varsha. Second is Varsha herself, who we called as principal. Third is myself, Srini. Now, first leg of transaction is Varsha has to receive goods. What she can do is she can ask her principal to directly send the goods to job worker, or she can ask the supplier to send the goods to her premise as well. In both the cases, there is no issue with respect to input tax credit. She can take input tax credit. The first scenario where supplier directly sends the goods to Srini, that is the job worker, there will be an issue under section 16 with respect to receipt of goods. However, exception to receipt of goods, one of the exception is job work transaction. So therefore, first leg of transaction, no issue. Second leg of transaction. So second leg of transaction is movement of goods from Varsha's premise to Srini's premise. Will this qualify as a supply? It won't qualify as a supply. What Varsha has to do? She has to give a delivery challan for this transaction. Now, should any tax be paid for this transaction? No tax has to be paid. This transaction is not even qualified as supply as per section 143. Right? Now, once Varsha sends the goods to Srini, can Srini send the goods to one more person for doing some other work? Yes, he can do. After he does, that is, let me put it in technical terms, can the job worker, after receiving the goods, can he send the goods to another job worker? He can certainly send the goods. Should he pay any tax? No, he did not pay any tax. What document has to be issued? Again, a delivery challan. Right? Okay. Can Srini, that is the job worker, keep the goods belonging to his principal forever? No. He has to send the goods within 1 year in case of inputs. In case of capped goods, it is 3 years. 3 years has to be calculated from the date of being sent out. What 1st January 2020, that is when the job worker receives the goods. In this case, that is when the inputs are transferred, it has to be returned back by the job worker within 1 year. What if he does not return back within 1 year? What will happen is the initial transaction, the transfer of goods from Varsha to Srini will be deemed to be a supply, and this won't be a supply from the date on which you send back the goods. It will be a supply retrospectively, that is from the date of goods being sent out. So from that date till the date of goods being sent out, sent back by job worker to the principal, the Varsha or the principal has to pay tax along with interest. Interest will be for the period when the goods were sent out and the period where goods were sent back by the job worker. I hope you have understood the different legs of transaction and its taxability. Right? Everyone, any doubts you can ask me. So we have now understood some basic principles or concepts with respect to job worker. Now let us understand one more leg of transaction and then move on to the study material and then see whether whatever we have discussed is given in the study material. Right? Continue with the same example. Now, so Varsha has sent it to Srini. Srini now has 2 options. Srini can either send back the goods to Varsha, or Varsha can ask Srini to directly send the goods to customer of Varsha. Let us take some name. Let's take Tirumalai. Let's say customer of Varsha is Tirumalai. So Varsha's customer is Tirumalai. Varsha is saying, "She do not send the goods to me. You can directly send the goods to Tirumalai." Is this permissible? First of all, is the first question. So we are trying to understand each and every leg of transaction. First leg of transaction is principal purchasing goods. He can purchase the goods and he can ask the supplier to deliver it to her premise or direct to the job worker premise. Second leg of transaction, transfer of goods from principal to job worker. Third leg of transaction, the goods that is being done on job work basis has to be sold by Varsha. Varsha has two options. From the premise of the job worker, she can direct job worker to send it to the customer, or she can receive the goods. She can also send the goods to Varsha. Varsha can in turn send the goods to customer of Varsha, that is Tirumalai. In this case, when goods are sent back by job worker to principal, that is Srini to Varsha, and Varsha sends it to Tirumalai, there is no issue at all. It will be a normal. The first leg of transaction, Srini to Varsha will not qualify as supply, right? So whenever Srini sends the goods back to Varsha, assuming that it is sent back within 1 year, this transaction also will not qualify as supply. No supply, right? Again, delivery channel, DC has to be documentation which DC has to be issued. So therefore, this leg of transaction, that is when job worker sends goods back to the principal, again the transaction will not qualify as supply. No tax has to be paid, provided it is sent within 1 year's time. Right? Now, after this transaction, the next leg of transaction will be Varsha can send the goods to customer of Varsha. Normal supply transaction, Varsha will charge GST, no issues. Now, supposing Srini does not send the goods to Varsha, job worker directly sends the goods to Tirumalai, right? This leg of transaction. What will happen? In whose hands this will be treated as supply? This will be supply of principal only and not the job worker. Though goods are sent from the premise of job worker, that is Srini, to the premise of customer of Varsha, that is Tirumalai, this transaction will still qualify as supply of Varsha. So therefore, supply of Varsha. So Varsha will have to raise a tax invoice on Tirumalai. This is point number one. Point number two, before seeing the taxability, first of all, is it possible for the job worker to send the goods directly to the customer of Varsha? The answer is yes and no. When yes, when no. If yes, that is job worker Srini is a registered person, no issues. He can send the goods to customer of Varsha. So one reason why job worker can directly send the goods to customer of Varsha is he should be a registered person. Second, if at all he is not a registered person, Varsha should register Srini's premise as additional place of business. So I told we are discussing now what happens when the job worker directly sends the goods pertaining to the principal to the premise of the customer. In that case, the first question that we try to answer is whether at all job worker can do that. Answer is yes as well as no. Yes, when the job worker is registered. If the job worker is unregistered, if the job worker's premise is treated as or declared as additional place of business by Varsha. I'm repeating again, we are now talking about whether at all the job worker can do this type of a transaction. Yes, he can do, provided he should either be a registered person or if he is an unregistered person, the premise of job worker has to be registered by Varsha as additional place of business. In those scenarios, from the job worker's premise directly to the premise of the customer of Varsha, job worker can send the goods. When no, if two conditions are not satisfied, either job worker is unregistered job worker, and this premise is not declared as additional place of business, which means contra. So if these two conditions are not satisfied, then job worker cannot supply the goods from his premise to the customer of Varsha. He has to necessarily send the goods back to Varsha. Varsha can only send the goods to customer. To summarize, job worker can certainly send the goods directly to the premise of customer of principal, provided he is registered, job worker is registered. Also provided if he is an unregistered person, he should at least, that is Varsha should at least register the job worker's premises additional place of business. I hope you are able to understand and appreciate this discussion. Let us now move on to, so what we can now do is, we can probably run through the notes once and see whether we have missed out something. I have deliberately missed out some points which I wanted to discuss when I am going to the study material, right? So one more point before completing or before going to study material. We saw that the time limit for sending the goods back to the premise of the principal is 1 year in case of inputs, 3 years in case of capital goods, right? However, this time limit of 1 year or 3 years is not applicable in one case, when the goods are such as mounts, jigs, fixtures. I think the other one is fabricators or something. Let me look at that. So there is a time limit within which job worker has to send back the goods to the principal's premise. However, there is no time limit at all if the goods that the principal sends to the premise of job worker is the following: 1 molds, jigs, fixtures, and one more item is there. Let us see the study material. These 4 or 5 items. For that, there is no time limit at all. Why there is no time limit? There is a logic. If you want to understand the logic, please comment, I will tell you. But as of now, understand the time limit of 1 or 3 years, as the case may be, is not applicable for certain goods such as molds, jigs, fixtures, etc. This is point number 1. Point number 2, which you have to understand, is this 1 year or 3 years time limit can be extended by commissioner. You have to make an application. Let us assume a particular industry, let us say, for doing some process on capital goods, it will take 4 or 5 years. There are some certain industries where job or process itself take lot of time. So in those cases, you can obtain a special permission from the commissioner. It can be extended for something that also we will see in the study material. So therefore, the last point that we understood was the time limit. Time limit is normally 1 year or 3 years. However, it can be extended by the commissioner after you making an application. And second point is that time limit is not applicable for molds, jigs, etc. Jigs, fixtures, etc. Now let us directly move to the study material and see what they are saying. Whether is there any additional points that they have covered. Let us start from the beginning. Okay. Of course, there are some definitions. I don't want to go into the definition. So, any question and job work, you have to write only 2 sections. Any point on input tax credit, you have to quote section 19 of CGST Act. Repeating it again, any point on input tax credit. So we saw 2-3 points with respect to input tax credit. 1, the principal can take input tax credit despite not receiving the goods, right? This pertains to input tax credit. This is covered under section 19. Second, I told you that as regards the transfer of, okay, one more point I missed out. Let me tell you. In fact, I don't want to take the notes. If you could recollect our discussion, let me share the notes with you. I think I did not share the notes. Now, one more point I want to discuss. If you could recollect our discussion in registration, where for aggregate turnover definition, there was an explanation. What did that explanation say? The explanation said, if at all goods are directly sent from the premise of the job worker to the premise of the customer of the principal, then in that case, the aggregate turnover, for the purpose of computing aggregate turnover, this value will not be included in the hands of job worker, right? That also is relevant. So therefore, that turnover will be turnover of principal only, despite the fact that goods are being sent from job worker's premise. Just to recap, right? So I was just telling you that any question on job work, please quote 2 sections. Section 143 read with section 19 of CBST Act. If it is a pure question on credit, input tax credit with respect to jobber, you can quote section 19. Otherwise, you can quote section 143. Right? Now let us start. First point that they have said, principal can send goods to job worker without payment of tax. That's what we saw. Can Varsha send goods to Srini without payment of tax? Absolutely yes. He can send. Allowed, a registered person is allowed to send inputs or capital goods without payment of tax to a job worker, and from there to another job worker. We had an example where Srini is again transferring goods to Mahendra or someone. So therefore, it is possible to send the goods from principal to job worker, from the job worker premise to another job worker as well, without payment of tax. And then after completion of job work, bring back such goods without payment of tax. So therefore, when the goods are brought back from job worker premise to principal premise, in that transaction also there is no tax liability. Such goods needs to be removed under intimation and subject to certain conditions. There are procedural aspects to it. I'm not going into that. That's not necessary as well. Right? Right. This is the first point that we saw. If you could recollect, principal is not required to reverse the ITC availed on inputs and capital goods dispatched to the job worker. So the first point is, just because principal is sending the goods to the job worker, he need not reverse any input tax credit, right? So that's very obvious point, but still. So therefore, on one hand, there is no tax when I transfer the goods to you. On the other hand, whatever goods I procured as a principal, let's say Varsha need not reverse credit when she transfers it to the job worker. Okay, this point also we saw. Principal can also send inputs or capital goods directly to the job worker without bringing them to its premises, and can still avail the credit of tax paid on such inputs or capital goods. This is what we saw, exception to receipt of goods. Principal can avail credit despite the fact that supplier of the principal is directly sending the goods to the job worker and not the principal. That is what they have reiterated here. Right? Now, this point is what deals with time limit. It says, however, inputs are capital goods other than molds, dies, jigs, fixtures, or tools. Just memorize this: molds, dies, jigs, fixtures, or tools. Other than, which means for these items, there is no time limit for sending back the goods from the premise of the job worker to the premise of principal. The job worker can retain it for eternity. So therefore, however, inputs are capital goods sent to a job worker are required to be returned to the principal within 1 year and 3 years respectively from the date of sending such goods to the job worker. Please understand the date. So I think this point alone I would like to take a note and explain. This is very crucial. Many people make mistake in this particular point. Let us take 2 examples. Let us say Varsha sends goods on 1st January 2020. Srini receives on, let's say, 10th January 2020. Let's say on account of COVID there were some issues, therefore there was a late receipt of goods. Right? Now, in this case, 1 year has to be calculated from this date or this date. It has to be calculated from this date. 1 year from the date of sent out by principal, not from this date, which means Srini has to send back goods to Varsha within 31st December 2020. So therefore, 1 year has to be calculated from 1/1/2020. I hope this point is clear. The second point is what is crucial. This is very straightforward. So therefore, you have to calculate the date, the period of 1 year from the date of goods being sent out. But let's take the other scenario. The other scenario is supplier of Varsha. I forgot the name of supplier of Varsha. Let's take supplier of Varsha. Supplier of Varsha sends the goods to Srini directly on 1st January 2020. Srini receives it on same date, 10th January 2020. So in this case, Varsha is not sending the goods. Supplier of Varsha is directly sending the goods to Srini, and Srini is receiving it on 10/1/2020. In this case, it is not 1/1/2020 from which 1 year has been calculated. It is 10/1/2020. Date of receipt of goods by job worker. So therefore, there are two scenarios possible in case goods are transferred from one place to another place. Either the principal, that is Varsha, can directly transfer the goods to the job worker. In that case, 1 year will commence or 3 years will commence as soon as the goods are sent from the premise of Varsha. And in a case where goods are directly being sent by the principal supplier to the premise of job worker, in that case, time limit of 1 year has to be calculated from the date of receipt of goods by the job worker. This point you have to be very clear. Many people make mistake in this particular video. Let us proceed. Let us start with the continue with the notes. All right. Now, so from the, however, the period of 1 year and 3 years may, on sufficient cost being shown, be extended by the commissioner for a further period not exceeding 1 and 2 years respectively. I told you that certain industries, it is difficult for the job worker to complete the process within 1 year or 3 years, as the case may be with capital goods. So in those cases, you can apply to the commissioner for extension, and commissioner can extend if it is an input for 1 more year, if it is capital good for 2 more years. In effect, the maximum time for inputs is 2 years, maximum time for capital goods is 5 years. But only if you apply to the commissioner, this additional 1 year for inputs and 2 years for capital goods will be applicable. Extension of time is allowed to cover the situations where the period of 1 year specified is not adequate in respect of job work, such as hull construction or fabrication of vessel, since these processes complete in a period of around 14 to 16 months. So they have given some practical examples where in industries such as hull construction or fabrication of vessel. So for constructing a vessel or fabrication of vessel, it will take a lot of time. Vessel is a huge this one, right? So therefore, it will take a lot of time. So in those cases, you can go for it. In fact, you can also take this COVID as an example. Let's say job worker is not operating for almost last 3 months, and it will take at least 6 to 9 months for him to complete. So therefore, he can request the commissioner. Already, I did not do work for almost 3 months, and after COVID, my all my manpower will not be available for me. So therefore, I want an extension. Commissioner will certainly provide. So therefore, some difficulty that arises for completing it within 1 year or 3 years, certainly can apply to the commissioner. He will grant an extension. Right now, the provisions of return of goods is not applicable in the case of molds and dies, jigs and fixtures or tools supplied by the principal to job worker. As I told you, there is no time limit at all for molds, dies, jigs, fixtures or tools. If you want the reason, let me know, I'll tell you the reason. But for these items, the time limit for sending back is not applicable at all. 1 year, 3 years condition is not applicable. Moving on. Next leg of transaction. After processing of goods, job worker may clear the goods to another job worker for further processing or dispatch the goods to any of the place of business of the principal without payment of tax. This is what we saw. Job worker can send the goods to another job worker without payment of tax, or once he completes the process, he can send back the goods to the principal without payment of tax. There is no issue at all. Right? Next discussion. What if he supplies directly to the premise of the customer of principal? Supply of goods directly from job worker's place of business or premises. After processing of goods, principal also has the option to clear the goods directly from job worker's premises on payment of tax within India or without payment of tax for export outside India on fulfillment of conditions. What are those conditions? We will see. Facility of supply of goods by principal to third party directly from the premise of the job worker on payment of tax in India. Likewise, with or without payment of tax on export may be availed by principal on declaring premise of the job worker as his additional place of business in registration. So when you apply for registration, it will ask you specifically, do you have any additional place of business? So you have to mention the job worker's premise. If at all job worker wants to send the goods directly to the customer of principal, he has to, that is the principal has to declare the job worker's premises additional place of business in his registration. However, such declaration is not required by the principal where job worker is registered under section 25. Suppose if job worker is already registered under the GST law, there is no requirement for additional place of business. Or principal is engaged in supply of notified goods. This is what we discussed. We raised the question whether at all job worker can send the goods from his premise to the premise of the customer of principal. So therefore, we said yes and no. Yes, if job worker is a registered person. So if job worker is a registered person, no requirement for additional place of business. If job worker is an unregistered person, then principal has to declare that place as additional place of business. In these two circumstances, we can certainly send back the goods from job worker premise directly to the customer of principal. The last one is the government has notified certain goods which does not require either declaration of additional place of business or registration of the job worker. So if the job worker or the principal is engaged in supply of notified goods, then this condition of the job worker either being registered or if unregistered, principal has to disclose it as additional place of business is not applicable if principal is engaged in supply of notified goods. Okay, what are those notified goods? It is there, right? Now, in such cases, supply of goods will be regarded as supply by the principal and not the job worker. I told you, when Srini sends the goods from his premise to the premise of customer of principal, then the transaction will qualify as supply in the hands of Varsha and not Srini. That's what they have said. Supply of goods will be regarded as supply by the principal and not the job worker. Resultantly, it is clarified that time, value, and place of supply would have to be determined in the hands of the principal, irrespective of the location of the job worker's place of business or premise. So, time of supply, be it value of supply, place of supply, whatever it is, it will be calculated based on the principal's set of facts. It is not. It is completely irrelevant whether job worker is located in A premise or B premise. You have to see from the perspective of the principal and then decide what is the time, value, and place of supply. Further, the invoice would have to be issued by the principal. As I told you, Varsha only will have to issue invoice to the customer. This also clarified that in case of exports directly from the job worker's place of business or premise, LUT or bond, as the case may be, shall be executed by the principal. If you could recollect our yesterday's discussion, we saw that in case of exports, there are two options. One is without payment of tax, next is with payment of tax. In case of without payment of tax, I have to furnish letter of undertaking or bond. They say this letter of undertaking or bond, if at all, let's say my customer, that is principal's customer, Varsha's customer is located in abroad. Varsha's customer is located in UK. Now she has two options. From the job worker's premise, directly goods can be sent to UK, or she can receive the goods and send. Now let us assume a scenario where job worker is directly sending to UK. In this case, Varsha has to obtain letter of undertaking or LUT. LUT or bond. Only then without payment of tax will be applicable. So therefore, when the goods are being exported from job workers premise, it is possible first of all, subject to those two conditions, additional place of business registered person or notified goods. However, the letter of undertaking or bond will have to be obtained by the principal, right? And one more point which has to be discussed here. Let us assume, let us slightly take the example. Same persons, instead of mobile phone, let us say Varsha is sending, let us say, steel, okay, to the premise of Srini, job worker. Using that steel, I have to do some activity, molding, etc. Right? I have to cut the steel into pieces. I have to bring that steel in some form. Okay. Let us assume I do that activity. Obviously, in any process relating to steel, there will be some scrap generated. The question is, there are two questions. One, the scrap generated from job worker's premise, can the job worker directly sell it to outsiders? This is number one. Point number two will be, should the scrap be sent back by the job worker to the principal and principal only can sell it? How does it work? So I'm repeating it again. Varsha, principal is sending goods to Srini, job worker. What goods? Steel. What is my job? I have to mold it, I have to make it in a certain shape and form. That is the job worker's uh, job. Now, when I'm doing this process, certainly there will be scrap. This scrap, what I have to do? Can I sell it directly from my premise or not? Yes, you can directly sell from your premise. All the conditions that are applicable when you have to send the goods from your premise to directly the customer of principal will apply. Which means if the job worker wants to sell this scrap, number one, you should either be a registered person. If he is a registered person, certainly he can do it. Suppose if he is an unregistered person, then principal should have classified this premise as additional base of business. In that case, job worker can certainly sell waste or scrap from his premise directly to his customer. So therefore, I hope this point is also understood. It is similar to a normal sending of goods by the job worker to the customer's premise. Okay. Let us move on. These are all procedures. Procedures I would request you to see. That's not a big issue. I told you that delivery challenge has to be issued when the goods are moved from principal's premise to job worker, from job worker to another job worker. Again, delivery challenge. When the goods are sent back, again delivery challenge. Those points you can see. Okay. Important point to be noted is the GST law fixes all the responsibilities on the principal and on the job worker. Not only with respect to invoicing other things, also with respect to proper accounts of inputs or capital goods. So whatever goods that are being sent to the principal and to, so let's say I told steel, let's say I send steel, let's say 100 kgs, right? Now, when I send back the job worker send back steel, let us say he's sending only 90 kgs. All these accounts with respect to how much he is sending, how much he is receiving, all these things principal has to maintain. It is the responsibility of the principal to maintain all such details. Right? Next is deemed supply. I told you goods has to be returned back within 1 or 3 years respectively. What will happen if the goods are not sent back? In case the inputs or capital goods are not received back or not supplied from the job worker's premise within the specified time limit, that is 1 or 3 years, it shall be deemed to be a supply from principal to the job worker from the day when it was sent for job work. Accordingly, the principal would be liable to pay tax along with interest. This I already told you, when it is not returned back by the job worker within 1 year or 3 years, as the case may be, then it will be deemed to be a supply, and it will be deemed to be a supply retrospectively from the date on which it was sent back. Right? Thus, goods sent for job work acquire the character of a supply when the inputs or capital goods sent for job work are neither received back by the principal nor supplied further by the principal from the place of business or premise of the job work within 1 or 3 years or extended period. Please understand, if instead of sending back the goods from job worker's premise to the principal premise, if job worker is directly sending to the customer of principal, don't say it is a supply. That is the two leg of transaction. One is initially principal sent the goods to job worker. We are now concerned only about that transaction. For this transaction, if job worker is not sending back the goods again, then in this case it will be deemed to be a supply. Suppose instead of sending the goods to principal, he is sending the goods directly to the customer. That will also be treated as if the job worker has sent the goods back to the principal. So you should not say that transaction also is a supply. No. It may be noted that the responsibility of sending the goods for job work as well as bringing them back or supplying them has been cast at the principal. As I told you, all the roles and responsibilities are with the principal only. In such cases where the inputs are capital goods, again, other than molds, dies, sticks, and fixtures, we know that it is not treated for the purpose of 1 or 3 years, are neither returned nor supplied from the job worker's place of business within the specified time period. Principal would issue an invoice for the same and declare such supplies in his return for that particular month in which the time period or 1 or 3 years was expired. Obviously, when you are disclosing the return in that month where it was not returned, only you will disclose. But tax has to be paid from the date of, or rather retrospectively. Okay, let us move on. Date of supply. So this is what I told. Retrospectively, it will be date of supply. The date of supply shall be the date on which such inputs or capital goods were initially sent to the job worker. 1/1/2020 is the date. Further, interest for the intervening period shall also be paid on the tax. I told you interest also you should pay. If such goods are returned by the job worker after the stipulated time period, Same would be treated as a supply to the job worker to the principal, and the job worker would be liable to pay GST if he is liable for registration in accordance with provisions contained in CGST Act read with the rules made thereunder. Further, it may be reiterated there is no requirement for either returning back or supplying goods from the job worker's premise as far as molds, dyes, and wicks are concerned. Therefore, this we also know. Molds, dyes, wicks, etc. There is no time limit applicable. So, therefore, with this, we are almost done with the job worker chapter. We will now move on to section 19. Section 143 and 19, if you look at these are only two sections relating to job work. Both these sections have similar provisions. So whatever we are going to discuss in section 19 will also be a repetition. Okay, I'll just read it, and just for information sake, I'll tell you what is there, and then quickly move on to the next area. So section 9, credit on goods sent for job work. So I told you first when the principal sends instead of principal sending the goods to job worker, what if supplier of job worker sends? That's what they are given. Principal is entitled to take credit of input tax on inputs or capital goods sent to job worker for the job work. This we already know. Principal can also take ITC. This point we already know. So therefore, I'm not going to these 2 points again a repetition. Okay. So let us assume. See, please understand. As I told you, job worker can certainly use his own inputs in doing the job work. This is what we saw when we discussed the definition of job work. The question is, for those inputs, can he take input tax credit? Because as far as job worker is concerned, the only supply for job worker is the job worker charges. Whatever job worker charges, he charges for doing this activity, that is alone the supply. For that supply, whatever inputs he is using, in our example, mobile phone, he used some screws, that is an input for job worker, he can claim credit. That's what they say. Second one is time limit for return of goods. We have seen elaborately 1 to 3 years, which can be extended. I'm not going to that. It is again repeated. Summary of above provisions. Okay. So therefore, again procedure for job work. I told you if it is from one job worker to another job worker, again delivery challan. So therefore, I'm not going to that. They have discussed what provisions relating to goods sent from one job worker to another job worker, again repetition. So what you can probably do is you can actually strike out all those points which are repeated from section 143. Okay, so that it will not look very bulky, the entire chapter as such. Okay, so again this also we have discussed, goods directly sent by supply to the job worker. I'm not going to that. This point probably we can discuss, right? Now, let us take this is again a procedural matter to be discussed. Let us say 100 kgs of steel has been dispatched from principal's premise to job worker's premise. He has two options. One, at a stage, job worker can send entire 100 kgs to the principal's premise, or he can send it on piecemeal basis. What is piecemeal basis? He can do 10 kgs, 10 kgs, etc. He can send each and every time 10 kgs. If it is sent each and every 10 kgs separately, for each and every transfer of such 10 kgs from job worker's premise to the premise of the principal, delivery challan has to be separately issued, is what they say. Okay. Other points are all procedural in nature. This is important. Since I'm not teaching you what is e-label, etc., we are not discussing. Probably we will see after the class or 10 days class if we have time. Requirement of generation of e-label. Okay. Now, normally for generating an e-label, there is a limit. 50,000 is the limit. That is, what is e-label? I'm not going into. Let us assume there is a documentation requirement whenever you send the goods from your place to some other place. Not only job work, any place for that matter. Whenever you send the goods, you are required to generate a document called as e-label. Now there is a limit for e-label in case of interstate. In case of interstate, the limit is 50,000. Value of supply should be more than 50,000. Only then it is mandatory. Otherwise, it is optional. However, they say in case of job or principal transaction, if job worker is located in one state, principal is located in another state, irrespective of the value of consignment, e-label has to be raised. So therefore, this is an exception to the value given for the purpose of raising an e-label. Normally, the value is 50,000, but in case of principal job work transaction, there is no value at all, minimum value at all for generation of e-label. By default, e-label has to be generated. This is the point that I wanted to discuss. Registration requirement, I told you in aggregate term definition, there was one point which was there. Same point they have discussed here. I'm not going to that. With this, we are done with the chapter called as jobber. Very, very important chapter. Don't take it very lightly. I will share some interesting problems. Yesterday, I shared some problems for refund. I would request you to complete those problems and ask any doubts that may arise. And I would request you sincerely to solve the jobber problem also, because what happens is with respect to theory parts, they restrict themselves to jobber. But when it comes to practical problems, they do ask some problems which requires certain level of application of mind. So therefore, I would request you to solve problems related to jobber. I will share the problems after the class. With this, we are done with jobber. We will start with assessment. Let's say we will take a break of 2 minutes. We will start with assessment. சொல்லுங்க சார். அட்மின் இருக்காங்க சார். நான் பிரேக் கொடுத்துருவேன். ஓ, ஒரு 7 பேர் நாங்க லைவ்ல பண்ணேன். புரியல. ஆமாமா, ஒரு 7 பேர் இருக்காளே. உங்களுக்கு தெரியாதா நீங்க பாத்தீங்கன்னா? ஓகே 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 ஓகே. நான் ஒரு 2 மினிட்ஸ் பிரேக் கொடுத்துருக்கேன். ஒரு சாப்டர் முடிச்சிடலாம். ஓகே ஓ ஓகே ஓகே. நான் 7:15 தான் ஸ்டார்ட் பண்ணேன். ரைட். ஓகே. Let us start with the new chapter called as assessment. So job work, I hope everyone has understood the concept, its application. No, as I told you initially, unlike your income tax provisions, the assessment provisions under GST law is not very vast. In fact, content wise, it is not even 10% of your income tax, right? And there are also no case laws, unlike your income tax, because GST is a new law. So therefore, to that extent also, it is very, I would say, compared to income tax, very, very simple and easy. And conceptually also, it is not very difficult to understand, right? Let us start with the chapter called as assessment. Right. Let us directly go into the types of assessment. Now, I think I have shared this notes as well for assessment. Right. So provisions relating to assessment starts from section 59. Section 59 to 64 has different types of assessment. Each and every type of assessment has its own uniqueness. Okay. So we will start with section 59. Okay. So 59 is a straightforward assessment, nothing but your self-assessment. What is self-assessment? You file returns, GST returns every month, right? Every month you are supposed to file returns by the 20th of succeeding month. So whatever you file returns, whenever you file returns, you will do 2 things. One, you will assess your liability. You will assess your input tax rate available. After assessing the liability and input tax rate, you will arrive at the total tax payable for the month. This process of assessing yourself as regards the liability, assessing yourself as regards the input tax rate is called a self-assessment. Each and every month when you file returns, that filing of returns in itself is called as a self-assessment. So section 59 is very simple and straightforward, is self-assessment. Every registered person under the Act shall himself assess the tax payable by him for a tax period, and after such assessment, he shall file the return required under section 39. So it's very simple and straightforward. We have completed one section, section 59. Let us move on to section 60, which is slightly a bigger section compared to, in fact, significantly bigger section compared to 59, right? Provisional assessment. Before going to provisional assessment, let us understand some background. You see, in India, if you look at any litigation with respect to tax matter, okay, you know the hierarchy of litigation. First, the department will give a notice. I'll go for a department, I'll go for an appeal. with the department personnel itself. There are almost 2 levels of appeals in the department itself, and then I'll go to appeal before a tribunal, and then High Court, Supreme Court. Therefore, there is a hierarchy of litigation process. If you could appreciate this point, that in India, a tax litigation, at the minimum, if it wants to conclude at highest level, at the minimum, I'm saying it can even be more. It will be 15 to 20 years. If one notice is given today, it has to go to the next level and subsequent level, then tribunal, then High Court, Supreme Court. We are talking about a period of 15 to 20 years for complete conclusion in respect of that particular matter. It is a very significant period. So companies generally tend to avoid litigation because it will affect their business. How it will affect their business? You have to make a pre-deposit. There is a cash flow, and unnecessarily I have to appoint one person for that. I have to be constantly in touch with what is happening there. So therefore, litigation is a very, very tedious process in India. As far as possible, all the companies try to avoid litigation. Right? One such way in which under GST law, litigation can be avoided is provisional assessment. Right? How it avoids litigation, we will see. Second point, you have to understand, there is one more way to avoid litigation, that is advance ruling, which I have not taught you. I will come to that. I have included it some other day. We will come to that later. So there were 2 points. This provisional assessment, understand from that perspective to avoid litigation. And second point, you see, you have to understand one point very clearly. And in GST especially, since the concept of input tax rate is very wide enough, let us assume a scenario. I have a dispute. What dispute? Whether the tax rate is 12% or 18% is a dispute. Okay. One school of thought says it is 12%. For some reasons, other thought says 18%. The recipient to whom I will charge this tax is eligible for full input tax credit. In which case, whether I charge 12% or 18% doesn't matter. In those cases, it is very, very obvious, right, for the company not to avoid litigation to go for 18%. Right? And in fact, to confirm this 18%, there are some mechanisms available. One is advance ruling, second one is provisional assessment. Right? These are the background, and especially to attract your foreign direct investment. If a foreigner has to invest, or for that matter, domestic investor, if he wants to invest, he should be certain about his liabilities. One of the liabilities is tax liability. Tomorrow, government cannot come and say that you have to pay even more tax liability because he wouldn't have factored it when he invested money, when he is calculating the returns. So therefore, from all these perspectives, right, GST law tries to find out some mechanism or some way out to reduce the litigation. One of the mechanisms that I told you is advance ruling. Second mechanism is provisional assessment. First question, when provisional assessment will be applicable? 2 circumstances. One, when the tax, that is the registered person, is unable to determine the value of goods or services or the rate of tax applicable to the goods or services. 2 circumstances under which provisional assessment can be opted for. One is value of goods or services unable to determine. Second is rate of tax unable to determine. So you are either unable to determine the value of goods or rate of tax. Except for these 2 circumstances, you cannot go for provisional assessment, which means, let us assume you have a doubt whether input tax credit is eligible or not. You cannot go for provisional assessment. You have a doubt as to whether whatever time of supply provisions you have adopted is correct or not. You cannot go for this particular provision. Likewise, place of supply. You can go only for 2 scenarios. One is value of supply. Second one is rate of taxes. Okay. How does this mechanism work? This mechanism works very simply. You will go to the officer. Which officer? Your jurisdictional officer. You go and tell him, boss, with respect to this particular item, I do not know what is the value. Or with respect to this particular item, I do not know what is the rate of tax. According to me, I feel this is 12%. Right? I will tell him. He will provisionally look at whatever documents you have submitted and come to a prima facie conclusion. Right? After concluding prima facie, this is the tax rate or this is the value, then he will take some more time to conclude or to confirm or modify his prima facie conclusion. So first I will apply, I will have my own views, I will tell this is the value, this is the rate. He will examine my conclusion, he will examine the documents, then department will come to its own conclusion prima facie. After coming to a prima facie conclusion, there will be a final conclusion. For that, department will take some time. So this is the process. In these processes, individual processes, there are some procedures to be followed. There are some time limits available. That is what we are going to see in this provisional assessment. Right? So in this link, you would be able to appreciate this point. Let's say I come to a conclusion that the value is rupees 100, right? And the prima facie department also comes to a conclusion that value is 100. But when department analyzes in depth my transaction, it comes to a conclusion that it is 120. Obviously, this will take a time, right? This process will take time. Let us say it takes 1 year. Now, I would have paid tax on 100 rupees or 120, 100 rupees only, I would have paid tax. Now it is concluded as 120. For the remaining 20 rupees, should I pay interest is the question. Or will be applicable prospectively or retrospectively? If applicable retrospectively, should I pay interest? On the contra, initially department said it is 100. Now, when the transaction is finally assessed by the department, it is 80 rupees. The difference of 20, can I claim refund? If I can claim refund, is there any interest that the department will give for losing 20 rupees for this many period? These are all the subject matter of discussion. Broadly, I have discussed what is provisional assessment. We will see in detail in whatever legs I have discussed what is the procedure involved. Right? Let us go. Where the taxable person is unable to determine value of goods or services or both, or the rate of tax applicable to the goods or services, he may furnish an application in prescribed form, therein reasons for payment of tax on a provisional basis, along with the documents in support of his request electronically, though through the common portal, either directly or through a facilitation center notification. Let us take a simple example and understand this. Let us say I invent a new product. For this new product, I am not able to identify the rate of tax. So what I should do? Simple option available. I make an application to the officer. Along with the application, certainly I will have one view. I will think that it is 18%, 12%. I will have some view. I have to tell my own view. In addition to that, I will also furnish some documents in relation to that. What is the product that I invented? What are the components involved? What is the nature of the product? How it can be used, etc. I have to give detailed documentation with respect to whatever query I am raising. This is the first step. I make an application to the officer. Right? Now, what officer will do? Obviously, he will examine the application. First, he will receive the application. He will examine the application. So, proper officer may, on receipt of the application, issue a notice in the prescribed form requiring the registered person to furnish additional information or document in support of the request. An applicant shall file in prepared notice and may appear in person. Simple. Let's say I have applied. Proper officer has received the application. Now, two things can happen. The documentation is sufficient for the proper officer, or documentation is not sufficient. I would require, the department say, would require even more documents to analyze this transaction. So what can department do? Department can give a notice asking for additional documents. Right? Now, after receiving the additional documents, what will the officer do? Officer will come to a prima facie conclusion. Let us read the next step. Proper officer shall issue an order allowing payment of tax on a provisional basis. Please understand, there are two things. Now, whatever they are going to assess is a provisional assessment. It is not a final assessment. What is provisional? Temporary. Right? Therefore, this is not the conclusion. But prima facie, this is the conclusion. So, shall issue an order allowing payment of tax on a provisional basis, indicating. Did I share the notes? Yeah, I have shared. Okay. So, proper officer shall issue an order allowing payment of tax on provisional basis, indicating the value or the rate or both on the basis of which assessment is to be allowed on provisional basis. So, after analyzing the documents, first the department will arrive at a prima facie conclusion that this tax rate, we are, in our view, this is the tax rate, or if you are going for a value, this is the value, right? And please understand, this is a procedural point, next point, indicating the value or rate according to them, and the amount for which bond is to be executed and security to be furnished, not exceeding 25% of the amount covered under the bond. Please understand what can happen is, let us assume department comes to, let us say the tax rate dispute. I have invented a new product. I believe the tax rate to be 12%. Department also believes the tax rate to be 12%. So therefore both are agreeing for it, as of now at least. So therefore I will be start paying 12%. But department has a small difference of opinion here. It also thinks it can be also 18% or 28%. Now to safeguard the interest of the department, tomorrow after I say it is 18%, you should not escape. So therefore what they will do is, in addition to saying this is the rate of tax that is applicable, they might ask you to furnish a security, okay, and bond. So you have to execute a bond, and security in relation to such bond should not exceed 25% of the amount covered on the bond. Very simple. Department can say you have to execute a bond to the extent of 10 lakh rupees. So you have to execute a bond. In addition to the bond, you have to furnish a security, and that security value should not exceed 25% of the bond value. So department, based on the assessment, there is no hard and fast rule. Department can say any value to be executed as a bond. After executing the bond, it can also ask you to furnish a security in addition to the bond. The value of such security should not exceed 25% of the bond value. Right? So therefore, then what will happen? Now, what has happened? I have applied to the department. Department has seen whatever I have applied. It has come to a conclusion. I came to a conclusion previously. Now it has asked me to furnish a bond. It has also asked me to furnish a security. With this, the first leg of transaction, or first sequence of transaction is completed. Right? Now, then what happens? So I have applied for provisional assessment. He has done provisional assessment. Then it has to be finalized. What is finalization? He will finally conclude this is the rate of tax applicable bond. So this is the final rate of tax which he will apply from now onwards. That he will take some time, right? We have to see what is the time that he can take for final assessment. The final assessment order has to be passed by the provisional proper officer within 6 months from the date of communication of the order of provisional assessment. So he concluded prima facie that this is a tax rate, 12% is a tax rate. He would have communicated that 12% in the form of an order. So from the date of communication of the order, normally the proper officer is supposed to complete the final assessment within 6 months from the date of communication. However, on sufficient cost shown, obviously department will take a lot of time. Sufficient cost they will always show. Whether it is sufficient or not, they will show some cost. On sufficient cost being shown, and for reasons to be recorded in writing, the above period of 6 months may be extended to further 6 months by joint commissioner, additional commissioner, further 4 years by commissioner. So, if at all the department is unable to come to a final conclusion within 6 months, it can apply to the joint commissioner or additional commissioner asking for a further period of 6 months. If further period of 6 months is also not required, further 4 years it can be extended by applying to a commissioner. In effect, up to a period of 5 years, department can take to finalize this provisional assessment. So to summarize whatever we have discussed, we started with the concept of provisional assessment. We understood that the background is to avoid litigation. So for two reasons you can go for provisional assessment. One is unable to determine the rate of tax, unable to determine the value. What happens is the taxable person or registered person will apply to the department. He will apply for either rate of tax or value of supply. After applying for it, he will also give some documents to the department to verify. Department, after receiving the application, can ask for additional documents by giving a notice. After giving a notice, after receiving the information, department will prima facie come to a conclusion, and he will say this is the rate of tax, this is the value of supply. In addition to that, department, to safeguard its interest, it can also ask you to furnish a bond, and it can also, in addition to bond, ask you to furnish a security. The value of security should not exceed 25% of the bond value. After doing all these activities, provisionally he will say something, this is the rate, this is the value. Then he has to finally conclude what is the final value according to the department. That will take some time. The maximum time allowed is normally 6 months from the date of communication of the order of the provisional assessment, which can be extended for a further period of 6 months by additional commissioner and joint commissioner, which can further be extended for a period of 4 years by the commissioner. Right? With this, the provisional assessment is finalized. What next? We discussed already. There are two probabilities. One, the rate of tax finalized in the final assessment can be higher than that of the provisional assessment. This is one scenario. Second scenario, rate of tax in the final assessment can be lesser than that of the provisional assessment. Two scenarios possible. If the rate of tax in the final assessment is higher than provisional assessment, what will happen? Consequentially, the registered person has to pay the higher rate of tax retrospectively. That is from the date on which he applied, or from the date. In fact, it is not from the date on which he applied. From the date on which he has been paying that rate. Let us assume a person has commenced business on, let us say, 1st January 2019. He is going for a provisional assessment. Let us say on, let us say 1st September 2019. So he started business on 1st January 19. He went for provisional assessment on 1st September 2019. Now he has been adopting 12% rate, right? After applying for provisional assessment, department is taking 1 year's time. Department is finally concluding that you have to pay 18%. Let's say on 1st September 2020. In this case, the question is this 18% that I have to pay, the difference between 12 and 18%, this excess 6%, I have to pay from 1st January 2019. It is not from 2020 September, or it is not from the date on which I applied. It should be retrospectively applied from 1st January 2019. So therefore, it is the payment of tax, excess payment of tax, whenever the rate of tax in final assessment is higher than provisional assessment, or for that matter, value of supply is higher than your provisional assessment, you have to pay tax from the date on which it became payable. It became payable on this value or this rate with effect from the first day itself. So therefore, if the value or rate determined as per final assessment is higher than the provisional assessment, you pay the tax amount retrospectively along with interest. Interest, when it will be calculated, from when it will be calculated from the original date on which tax became payable. This is a very frequently asked examination question. They will give you a set of facts with respect to provisional assessment and final assessment. They will ask you to calculate interest. So you will calculate interest from the day on which tax became payable. For January month 2019, tax became payable not from January 1, 2019, but from February 20, 2019, because the last date for payment of tax for a particular month is 20th of the succeeding month. This is a new information I'm telling you. For each and every month, you are supposed to file returns by 20th of the succeeding month. The due date for payment of tax is also 20th of the succeeding month. So in this case, in this example that I told you, interest liability will commence from 20th February 2019 till the date when you make the payment of tax. Okay. Now this is scenario number 1. Scenario number 2. Okay. What if the value in final assessment or rate of taxes in final assessment is lesser than the provisional assessment? I can certainly go for a refund. However, department or the government is always unfair with respect to interest. When they wanted interest from our side, they calculated from retrospective date on which I became liable to pay tax. But when it comes to refund, they will not pay retrospective interest. First of all, I have to apply for refund. After my application, if refund is not granted within 60 days, 61st day, then they will give interest. Very, very unfair. And the rate of interest is also very abysmal. It is 6% in our case. For their case, it is 18% or something. So therefore, when it comes to rate of interest, or when it comes to number of days for which interest has to be paid, it's always on the department side, it's beneficial. From our side, it is non-beneficial. This is what we will be discussing. Let us read the provision. Now, two circumstances where the tax liability as per the final assessment is higher than in provisional assessment, that is, tax becomes due consequent to the order of final assessment, the registered person shall be liable to pay interest on tax due but not paid at the rate specified under section 50 subsection 1 from the date the tax was due to be paid originally till the date of actual payment. So as I told you, whenever final assessment value is higher, I am supposed to pay tax along with interest from the date when the tax was due. In our case, tax was due for the month of January. The due date for payment is 20th February. From that date till the date of payment, you have to pay interest. In simple words, in case any tax amount becomes payable subsequent to finalization of provisional assessment, then interest at the specified rate will also be payable by the supplier from the first day after the due date of payment. They are using the word due date of payment of the tax till the date of actual payment, whether such amount is paid before or after the issuance of order of final assessment. Till such time you pay tax, your interest gets accumulated. This is scenario number 1. Scenario number 2, where the tax liability as per the final assessment is less than the provisional assessment. Then tax becomes refundable consequent to the order of final assessment. Registered person shall be paid interest at the rate specified in section 56 from the date. See this, from the date immediately after the expiry of 60 days from the date of receipt of application in accordance with provisions of 54. What is 54? Refund provision. I have to make a separate application for refund. They will not give automatically. I have to make an application. And when I make the application, if after receipt of the application, within 60 days, if the department does not grant refund, from 61st day, I can claim interest. Otherwise, I cannot claim interest. In simple words, in case any tax amount becomes refundable subsequent to finalization of provisional assessment, interest subject to eligibility of refund and absence of unjust enrichment at the specified rate will be payable to the supplier. It is not only the rate of tax, they will also see the unjust enrichment. Supposing, let us say, department initially said it is 18%. Now I am also charging my customer 18%. Now what happens is, I cannot claim refund because if you could recollect the concept of unjust enrichment, incidence of tax should not be passed on. In this case, 18% have I transferred to the customer? Yes, I have transferred. Therefore, refund also I am not eligible to claim. So because unjust enrichment will apply. So that also is a point which you have to keep in mind. And of course, the last point is we would have furnished the bond or security after the final assessment is over. That bond or security can be released after making an application. So this is the biggest assessment. All the assessments are small only, right? Let us recap this assessment, provisional assessment. For 2 circumstances, you can go. 1, value of supply. 2nd, rate of tax. You have to apply. Department will see that application. Department will come to a prima facie conclusion. After department comes to a prima facie conclusion, it will ask you to execute the bond and the security. After it is asking you to do it, it will go for a final assessment order. The value determined in a final assessment order can be less or more than the total assessment. Based on whether it is less or more, tax is payable or tax is refundable. Interest in case of tax is payable, it will start commence from the due date of payment till the actual date of payment. In case of refund, it will start from the 61st day of you applying for the refund. So with this, we are done with section 60 also, right? Next, if your assessment will be very small. In fact, 62, 63 is very, very small. Okay, let us come to section 61, scrutiny of returns. Let me see if there is any question. Okay. If you have any questions, you can ask me. Let us now move on to the concept of scrutiny of returns. Right? It's very, very simple, straightforward. Now, like how you have scrutiny of assessment or scrutiny assessment under income tax law, same concept is there under GST law. On some basis, department will identify certain taxpayers for scrutiny. What they will do, they will take up for scrutiny, they will ask some information from you, they will ask other related documents from you, you have to provide those documents. In case, during the scrutiny, if any discrepancy is found out, they will give a notice to you. We have found out certain discrepancies, please respond to this discrepancy. Suppose you fail to respond to the discrepancy, then department can initiate certain proceedings. They can initiate audit, they can initiate certain, I'll come to the proceedings later. So department can initiate. Suppose you are responding properly, but the response is not satisfactory, then also they can proceed for certain proceedings. I'll come to that later. Suppose the response is satisfactory, there ends the matter, scrutiny of assessment ends there. Okay, so therefore very simple. Scrutiny means I will randomly take a taxable person's information returns. Okay, I will verify the returns. I will ask for certain clarification. You will give a clarification. If you are not giving a clarification, I will go for next action. If you are giving the clarification and the clarification is not satisfactory, I will proceed with some other action. If the clarification is satisfactory, there ends the matter. This assessment is closed. Okay, let us see what are the consequences of not clarifying or clarifying this clarification of satisfactory. Okay. Scrutiny of returns, verifying the correctness of return. The return furnished by a registered person may be selected for scrutiny by a proper officer to verify its correctness. Where any return furnished by a registered person is selected for scrutiny, proper officer shall scrutinize the same with reference to the information available with him. This is what is called a scrutiny. So what will happen? If at all there is a discrepancy, notice, issue of notice. In case any discrepancy is found during scrutiny of return, proper officer shall issue a notice to the said person informing him of such discrepancy and seeking his explanation thereto within such time not exceeding 30 days from the date of service of notice or such further period as may be permitted by him, and also where possible quantifying the amount of tax interest payable. Very simple. If he finds any discrepancy, he will give a notice. For that notice, you are supposed to respond within 30 days. However, if you want some more time, you can ask the department. So therefore, once he sends a notice, it is your duty to respond. In the notice itself, he can say, according to me, this is a tax payable. Based on the scrutiny, you have not paid taxes for so and so item. He will quantify the tax also in some circumstance. Or he can also ask for some documents, some information, etc. So anything can be done in scrutiny. He will basically issue notice, I have to respond. Okay. Now, there are two possibilities. One registered person responds. Second, registered person does not respond. If he does not respond, there is one set of consequence. If he responds, but the response is not satisfactory, there is one consequence. If the response is satisfactory, there is the matter. That's what we are going to see now. Reply to notice. If the registered person to whom notice is issued may accept the discrepancy as mentioned in the notice and pay the tax. Very simple. Simple solution. He has found out some discrepancy. I am accepting those discrepancy and paying tax. There ends the matter. No other consequence. And any other amount arising from such discrepancy and inform the same or furnish an explanation for the discrepancy to the proper officer. So there is a notice of discrepancy. I accept the discrepancy and pay the amount of tax. There ends the matter. Second option is what? Submit this explanation regarding non-acceptance of discrepancy within a period of 30 days of being informed by the proper officer or such further period as may be permitted. So normally 30 days is the time for responding to it. I can either go for accepting the discrepancy or I need not accept the discrepancy and tell the reasons in reply to notice as to these are the reasons why I object to your discrepancy. Right? Now what will happen? From my side, I am done away with. I first case accept the discrepancy, no issues, there is the matter, I pay the tax. Second, I do not accept the discrepancy. Then ball is on the court of proper officer. What can proper officer do? Where the explanation furnished by a registered person on the information or the information submitted is found to be acceptable, proper officer shall inform him accordingly and no further action shall be taken in this regard. Supposing the explanation that I give him is satisfactory or information is acceptable, there ends the matter, there won't be any further action taken by the officer. Suppose, in case no satisfactory explanation is furnished by the registered person, or where the registered person, after accepting the discrepancy, fails to take corrective measure in this return for the month in which discrepancy is accepted, proper officer may take recourse to any of the following provisions. Very simple. You are either not providing a satisfactory explanation, or you accepted the discrepancy, but you are not taking any further action. What is the further action? Let us say in the notice, the department is saying 1 lakh is a tax payable, but you are accepting the discrepancy, but you are not paying the tax. So therefore, accepting the discrepancy, not following up with the action, or the explanation that you gave is not satisfactory with respect to the discrepancy. In that case, department can proceed with the following action. What is the action? Section 65, Section 66, Section 67, Section 73, 74. These are all the actions that the department can take. What is 65, 66 is what we are going to discuss in the subsequent discussion, that is audit. Section 65 is one type of audit. Section 66 is also one type of audit. Okay. What is Section 67? Inspection, search and seizure. It's a separate topic. Last one, 73 or 74. 73 or 74 is proceedings related to demand and recovery. How to recover taxes in case the assessee fails to make the payment of tax. That is a separate procedure. So, if at all, either the discrepancy for which a reply is given is not satisfactory, or discrepancy accepted but follow-up action not taken by the registered person, department can proceed with 65 audit or 66 audit or Section 67 inspection, inquiry, investigation, or Section 73 or 74 demand and recovery. With this, scrutiny of returns also is completed. So first we started with 59 self-assessment, filing of returns alone will amount to self-assessment. Then we moved on to the concept called as section 50, so section 60, which is basically about your provisional assessment. And then we move on to section 61, scrutiny of returns. So we need to complete 62, 63, and 64. 62 and 63, small assessment. In fact, both are similar in various aspects. So we'll complete 62, 63, and 64, then move on to audit. I'll come back in a minute time. I'll have some water and come. We will start with section 63. Okay. We can quickly complete in half an hour's time and then move on to this concept called as audit. Now let us start with next assessment, that is section 63, assessment of unregistered persons. So as far as examination is concerned, the weightage, if you look at from this chapter, at least one question is guaranteed. In some circumstance or some scenario, they are asking two questions. So therefore, you can assume at least one question you can definitely get from the examination if you're done with the assessment chapter. Right. Let us move on to section 63. This concept as such, what we are going to discuss, if we would have actually discussed, we would have actually seen in income tax, best judgment assessment. If you could recollect, section 144 of Income Tax Act. Sir, please do not go to income tax, sir. We will restrict ourselves to GST, sir. Yes, fine. So it is somewhat similar in terms of concept. That's what I'm trying to say. Okay. Assessment of unregistered persons. As the language itself clearly shows, this assessment is for those who are unregistered. Right? Under what circumstance this assessment can be done? Very simple. I am liable for registration either under section 22 or section 24. But I failed to register. What happens? I'm supposed to pay tax. I should have registered under the GST law and paid tax, but I did not do so. In this case, best judgment assessment can certainly be invoked, which means department will on their own find out the tax liability and ask you to pay. This is circumstance number one. Circumstance number two, we have not discussed the provisions related to cancellation of registration. Your registration can be cancelled on certain grounds. Right? So there are a lot of grounds. Some grounds are taken here, and if your registration is cancelled on certain grounds, obviously you will become an unregistered person. Hereinafter, since you do not have a registration, you will not be able to pay GST. So therefore, under those circumstances, they will assess you best of their judgment. So therefore, two circumstances when best judgment assessment in case of unregistered person can be invoked. One, you are liable for registration under the GST law, but either under section 22 or 24, but you fail to register, that in that circumstance they can go for best judgment assessment. Second, your registration has been cancelled for some reasons. What are those reasons? We will see now. Okay. Following reason: one, a registered person has contravened such provisions of the Act or rules made thereunder as may be prescribed. So the registered person is contravening some provisions of the Act or rules made thereunder. In that circumstance, department can cancel the registration. If department cancels your registration, you become an unregistered person. If you become an unregistered person, department can go for best judgment assessment. B, a person paying tax under composition levy under section 10 has not furnished returns for 3 consecutive tax periods. In fact, C and B we can read it together. If I am a composition dealer, if I don't file for a composition dealer, if you look at the filing of returns, it is yearly only. He will not file monthly returns. So if he does not file returns for a continuous 3 tax periods, in fact, actually this provision has to be corrected. Why? Because initially the return filing period for composition was quarterly. Now they have changed to yearly. So at that point in time, they said 3 consecutive tax periods, but they are yet to change it. But anyway, that's not our concern. So in case of composition dealer, if you do not file returns for 3 consecutive tax periods, if it's a normal registered person, if you are not furnishing returns for a 6 continuous tax period. What is a tax period? Tax period is a return filing period. Every month you have to file returns, right? Each and every month is considered as a tax period. So if you don't furnish returns for a continuous period of 6 months, your registration can be cancelled by the officer. So therefore, third circumstance and second circumstance put together, if you are a composition person, 3 continuous period you are not filing your tax returns. If you are other than composition person, you are not filing returns for a continuous period of 6 tax period. Next circumstance, any person who has taken voluntary registration but who has not commenced business within 6 months. So we saw something called as a voluntary registration, where we saw even though section 22 or 24 is not applicable to me, I can still go for some registration. That is called as a voluntary registration. In case of voluntary registration, if you do not commence business within 6 months from the date of obtaining registration, in that circumstance as well, certainly you can your assessment can be done to the best of the knowledge of the department. So therefore, the next circumstance is your voluntary registration and not commencing business within 6 months. The last circumstance, the registration has been obtained by means of fraud, willful misstatement, or suppression of facts. So you obtain the registration either by doing some fraud or willful misstatement or suppression of facts. Under all these circumstances, your registration will be cancelled. So if your registration has been cancelled on account of these reasons, certainly the department can go for best judgment assessment. So two scenarios: one, you are liable for registration, not registered; second, your registration has been cancelled on account of these reasons. Now you become an unregistered person. Your assessment can be done best to the judgment of the officer. There is a process for this assessment. We will see what is the process for this assessment. The process is very simple. First, the notice has to be issued. Before making the assessment, proper officer shall issue a notice to a taxable person containing the grounds on which assessment is proposed to be made on best judgment basis, and shall also serve a summary thereof electronically in the prescribed form. So, first, what he will do, he will give a notice. Taxable person shall be given 15 days time to furnish his reply. Obviously, he has to be given some time for reply, so he will be given 15 days for furnishing a reply. Thereafter, an order shall be passed and summary thereof shall be uploaded electronically in the prescribed form. If at all you are replying, he will consider his reply and then pass an order. If you are not at all replying, there ends the matter. He will assess to the best of his judgment. So, however, no assessment shall be passed without giving reason and opportunity. Obviously, department has to give an opportunity. So, with this, we are done with best judgment assessment. The last point is there is a time limit within which best judgment order has to be passed. So, the time limit is the assessment order shall be issued by the proper officer within a period of 5 years from the due date for furnishing annual return for the financial year to which non-payment of tax relates. So please understand the language. Please see the language very clearly. They say assessment order. So the officer has to pass an order saying this is the tax payable. For passing this order, there is a time limit. The time limit is 5 years from the due date of furnishing the annual return for the financial year to which non-payment of tax pertains to. Let us take a simple example and understand. Let us assume for financial year 18-19, you have not registered under the GST law. So department feels that you are liable to register, but you have not registered. So for this financial year 18-19, they have to pass an assessment order with 5 years from the due date of furnishing the annual return. What is the annual return due date for 18-19? It is 31st December 2019. From then, from that date, you calculate 5 years. 20, 21, 22, 23, 24, which means 31st December 2024 is the last date for passing the assessment order relating to financial 18-19. Because the annual return due date for financial 18-19 is 31st December 2019. From that, if you calculate 5 years, it comes to 2024, 31st December. I hope you are able to understand and appreciate this. So this is the first best judgment assessment, where a person is not registering himself in the GST law, or for that matter, your registration has been cancelled for some reasons. Those reasons are enumerated below. Under those circumstances, department will issue notice. You have to respond. So what can happen is he can pass an order based on his own best judgment, and after giving the notice, after receiving the reply, department has to pass an order. That order has to be passed within 5 years from the due date of furnishing annual return for that financial year. We took an example of, let us say, financial 18-19. For that financial year, the last date for filing returns was 31st December 2024. Within that time, the department has to furnish the return. Okay, this is with respect to section 63, which is a best judgment assessment. Let us now move on to section 64. That is also best judgment assessment only. I think we have missed out one section. We missed out section 62. Section 62 is also best judgment assessment only. We directly move on to section 63. So we will complete 62 and then move on to 64. Just a minute. All right. So we will complete section 62. We have completed section 63. 63 is a best judgment assessment in case where a person who is liable to be registered or whose registration has been cancelled on account of certain reasons, he can be assessed based to the judgment of the assessing officer. So section 62 is similar to 63. It is also a best judgment assessment, but this is a case where there is a registered person, but he has failed to furnish the return. Okay. So, notwithstanding anything contrary to the section 73 or 74, where a registered person fails to furnish a return under section 39 or under section 45, there is something called as final return. Okay. So, when you apply for cancellation of registration, you are supposed to finally file a return. That is section 45. And a notice under section 46 has to be issued by the proper officer to the defaulting taxpayer requiring to furnish a return within the period of 15 days. So what happens is, whenever you do not furnish returns, right, you will be receiving a notice. That notice will say you have not furnished a return, please furnish a return. And you are supposed to respond to that notice within 15 days time. If you fail to respond to that notice within 15 days time, then the proper officer can proceed to assess the tax liability to the best of his judgment. So this is a case where I failed to furnish return. I am a registered person, but I failed to furnish return. He will give a notice generally. If I do not respond to the notice, he will assess my tax liability to the best of his judgment. And the same time limit, whatever we saw for the purpose of section 63, that is 5 years from the due date of furnishing annual return to which this particular financial year pertains to, same time limit is applicable. That time limit we have to see. I hope you have understood this concept as well. So therefore, section 62 and 63 is about best judgment assessment. This best judgment assessment can be invoked in two circumstances where assessee fails to furnish return or assessee fails to register. Now, the last section with which he will complete the entire assessment chapter is section 64. With this assessment chapter itself is over. See, if you look at the entire provisions relating to assessment, number of sections is also very less, and concept also there is no, I won't say there is much big concept which are there. Only thing is certain things you have to just keep it in memory. Okay, so therefore one of the easiest chapters, but I have noticed that many people skip this chapter. I don't know the reason. They feel that assessment in itself is a tough topic, but I believe that assessment is one of the easiest topics. But job is also one of the easiest topics. Both the chapters will get a question, therefore utilize both the chapters to the maximum extent. Right. Now, last one, summary assessment. This concept is also there in income tax law, but in a different form. I'm not going to that. But what is summary assessment under GST law? Very simple. Under some circumstance, for protecting the interest of the revenue, the department can go for this kind of assessment. Let us take an example. Let us say there is something called as okay, you don't want to take names. Let us say there is a businessman who was running a airline. Now he has obtained huge amount of loans from bank. Now he is going to escape to some other country. Now he has to pay a lot of GST in India. Department comes to know. Department obtains some evidence regarding that person flying away from India. Now, what department does? They will assess the liability now itself. So the summary assessment is to protect the interest of the revenue. Whenever there is an evidence with the department that the person who has to pay tax, he will escape from India. Okay. Having this example in mind, if you read this provision, you will be able to understand this. So, two circumstances under which you can go for the summary assessment. One, it can be initiated to protect the interest of the revenue with the previous permission of additional commission. Please see this language. If at all I have to go for this assessment, I have to obtain previous permission of additional commissioner or joint commissioner. So therefore, it is not even once you initiate, you have to obtain permission. You have to obtain previous permission with additional commissioner or joint commissioner. When the proper officer has an evidence that a taxable person has incurred a liability to pay tax under the Act. So first condition is he should have an evidence that taxable person has incurred a liability to pay tax. So that's first of all, the person who is going to escape from India should have an evidence that he has to pay some tax liability to the government. Next condition, proper officer has sufficient grounds to believe that delay in passing an assessment order may adversely affect the interest of the revenue. So it says he should have sufficient grounds to believe that if we delay the passing of assessment order, there will be adverse effect for the revenue. So if at all I delay the assessment order, which the government has delayed, it's always it delays. If the fellow escapes, will it affect the revenue or not? It will certainly affect. So whenever the proper, if at all I leave that person now, it will adversely affect the interest of the revenue. Then only he can initiate the summary assessment. Summary assessment can be initiated only under exceptional circumstances. You cannot just like that initiate a summary assessment. These two conditions to be satisfied. One, he has evidence that taxable person has incurred a liability. Second, there is proper or sufficient grounds to believe that if you do not pass the assessment order now, it may adversely affect the interest of the revenue. If these two conditions are satisfied, then summary assessment order can be opted for. Next point, withdrawal of assessment order. This is very important. In fact, in some other section, there is again withdrawal of assessment order. I did not discuss it. I will discuss it after discussing this point because these two have to be read together. Withdrawal of assessment order. The summary assessment order may be withdrawn by additional commissioner or joint commissioner on an application filed with a taxable person for withdrawal of the summary assessment order within 30 days from the date of receipt of order, or on his own motion where he finds such order to be erroneous and may instead follow the procedures laid down in section 73 or 74 to determine the tax liability of such taxable person. So, two things they are saying. One, this assessment order which has been passed by your additional commissioner or joint commissioner, it can be withdrawn. One, if the taxable person himself files an application within 30 days from the date of receipt of order. So, summary assessment order would have been passed by the officer within 30 days. If you apply to the officer by that for summary within 30 days of the date of receipt of the order. So, you have to apply to the additional commissioner or joint commissioner saying, I'm not going away from India. I will be in India only. Please withdraw the assessment order. I will pay the tax promptly, like that they will say. Or on his own motion, where he finds such order to be erroneous. So let us assume some officer is misusing the power given. So he is misusing the power and going for the assessment. In that case, additional commissioner or joint commissioner on his own account can himself go for this particular withdrawal of assessment order. So therefore, two circumstances. One, additional joint commissioner can himself on his own, if he feels that whatever assessment order has been passed is not. Second circumstance, I myself can apply to the officer, that is additional commissioner or joint commissioner, within 30 days of the date of order. Under these two circumstances, your summary assessment order can be withdrawn. So this is one case where withdrawal of assessment order is permissible. There is one more case in the assessment provisions where withdrawal of assessment order is there. I have to read both these things together. So we saw section 62, which talked about best that assessee is not furnishing the returns, right? And in that assessment as well, there is a concept called as withdrawal of assessment order. We will see under what circumstance assessment order can be withdrawn. It says where the registered person furnishes a valid return for the default period within 30 days of the service of the assessment order, said assessment order shall be deemed to have been withdrawn, but the liability to payment of tax, interest, etc. shall continue. Please compare and contrast both these two things. Now, in summary assessment order also, if the taxpayer applies to the assessing officer within 30 days, he can certainly withdraw. The officer can certainly withdraw the assessment order. Likewise, if after passing of the order, within 30 days, if I'm furnishing the returns, that is my assessment has been done to the best of the judgment because I have not filed the returns. Moment I file the returns, that is within 30 days from the date of service of the order, it is deemed that the assessment order itself is withdrawn. Moment I file the returns, it will be automatically withdrawn. Therefore, section 62 has something called as withdrawal of assessment order. Section 64 has withdrawal of assessment order because I'm discussing this mainly because when during one under the assessment provisions, under what circumstance assessment can be withdrawn? That was a specific question which was asked. Therefore, please be very careful. Questions can be of any type. So therefore, two circumstance withdrawal of assessment order can be done. In one case of best judgment assessment, in case of non-filing of returns. Under that, if you file the return within 30 days of assessment order, then it will be withdrawn. In summary assessment, if you apply to the Joint Commission or Additional Commissioner, then also your assessment order will be withdrawn. The last concept that we are going to discuss is deemed taxable person. With this, the assessment chapter itself is over. This is actually given as a part of summary assessment, but it is a separate concept as such. Just a minute. All right. Now, let us move on. In case of supply of goods, let us read. It says where the taxable person. I'll give you an example. Let us say I have a godown. In that godown, I have large quantity of goods lying. Now, the department comes for inspection. When department came for inspection, department is asking, does the goods belong to you? I am saying no. Then whom does the goods belong to? I am saying I don't know. In that case, there is something called as deemed taxable person. Whenever goods belong to a particular person, and that person is unknown, and some other person has custody of those goods, he is also not saying the goods belong to whom, and he is saying that goods does not belong to him. In that case, it is deemed that the goods lying in the godown belongs to you, and the assessment in respect of those goods will be made on you and not some other person. So let us read how you understand. Where the taxable person to whom that liability pertains to is not ascertainable. So the goods belong to some person. He is only taxable person in respect of those goods, but that person is not ascertainable. And such liability pertains to supply of goods. In our case, godown goods. The person in charge, who is in charge of those goods, and the person who is in charge of the godown shall be liable to be assessed and liable to pay tax and any other section. Right? So they have given the same example. When goods are under transportation or stored in a warehouse, the taxable person in the person in charge of such goods shall be deemed to be a taxable person and will be assessed tax. So therefore, this is the concept of deemed taxable person. They will ask this question in this way. They will say, under some circumstance, some other person is also deemed to be the taxable person. What is the circumstance? Who is that person? This is the circumstance, deemed taxable person. So there can also be one more scenario where I transport goods from one place to another. During transportation of goods, the department fellow catches this particular vehicle and asks me who is the owner of these goods. I say I do not know. So in that case also, the driver can be deemed to be the owner of the goods and he will be taxed accordingly. So therefore, this is called as deemed taxable person. So basically, whenever you are in possession of goods and you are not aware, not that you are not aware, but you do not say that who is the owner, in those circumstances, this deemed taxable person concept will apply, and accordingly, the person who has the possession will be taxed or will be subject to GST. With this, we are done with assessment, right? I would actually start with the next chapter tomorrow. I have some work to be completed, so therefore we will start with this audit and continue with the tomorrow's portion. Okay, at 7 a.m. So any doubts or clarifications you have can come back, and I will share some questions relating to this assessment and job work after the class, probably 1 or 2 hours time. So I would request you to solve those questions as well and come up with any doubts that we have. And especially refund, I would request you to immediately solve it, because as I told, it is slightly a tricky chapter. Unless you do it immediately, it will be difficult for you. So therefore, we will see tomorrow morning 7 a.m. Thank you. Have a great day.